Hey, welcome back to the Flex Free Game channel. Now, most people think the stock market is about finding the next Tesla or the next Apple, but the truth is the market doesn't reward the smartest person in the room. It rewards the most prepared. Now, today I'm going to go ahead and talk about 5 stock market principles that the pros use that beginners really don't hear about, and I'll back them up with some real examples from companies you know. Now, if you want to stop guessing and start investing with confidence, go ahead and hit that subscribe button. And this channel is all about giving you that free game that's going to help you with skills to grow your portfolio, as well as, doing it the smart way without the hype. All right, so let's start with the biggest trap, and that is chasing quick money. So if you remember GameStop in early 2021, it was the talk of the stock market. It shot up from about $17 to over $480 in just a couple of weeks, and then it crashed, right? It went all the way back down to below 50. Now, if you bought late, right? If you were late to the game, you were hearing all the noise, all the hype, and you jumped in, then, you gambled, right? You didn't do it with, investment strategies or anything like that. You just heard the news, jumped in and gambled on it. And the people who made money on that, they weren't predicting the company's success, right? Because if you look at the actual information on the company, it wasn't doing well. It was kind of that business model was going out, but people wanted to save it. So it was, the Reddit whole thing happened and, they ran that stock up. But they weren't predicting the company's success, right? They were predicting traders' behavior, right? So retail traders, they're very gullible. They hear news, they jump in, and they want to make money fast, want to make that quick money. And it's an easy way to kind of pump and dump stocks, and that's exactly what happened. Now, professional investors, they're not chasing hype, right? Warren Buffett bought Coca-Cola back in 1988, and he still holds it today. And that's because he's buying businesses. He's not buying lottery tickets, right? And that's the mindset you want to have when you're going into the market. You want to make sure that you're making data-driven decisions, basing your decisions on information, things that you can see, things that are tangible, and not just following the hype and the next trend. All right, so the next thing I want to talk about is inflation. And if you know about inflation, it's kind of like having a slow leak in your wallet. In 2022, inflation in the US hit 9.1%, which was the highest in 40 years. And if your money is just sitting in a savings account, getting you 0.5% interest, you're actually losing about 8.6% in buying power that year. So that's why long-term investors stay in the market. It's going to give them the ability to outpace inflation, right? It's a big thing. The S&P 500, which includes 500 of the US top companies, has averaged about 10% annual returns over the last century. And that is really how you outpace inflation, right? You find a way to make your money make money so that as prices go up, as inflation goes up, your buying power doesn't go down because your money is going up and outpacing that, right? So you want your money to grow, but you want it to grow in a way that's going to outpace inflation. Now, 9.1% was extremely high. We're not usually in those types of situations, and we're back down below 3% now. But in the future, if you've watched how things work, prices don't do anything but go up. Every once in a while, there'll be a correction. Things may come down, but it's steadily pacing upwards all the time. So you want to have your money generating additional funds so you can outpace that inflation and you won't have that slow leak in your wallet. So there are hundreds of stock categories out there, but if you master these 3, you're going to be ahead of most investors. So the first one I want to talk about is growth stocks. Now, these are companies that are expanding and growing faster than the average company. If you want to talk about one like NVIDIA or Shopify, NVIDIA grew from 4.3 billion in 2013 to over 60 billion in 2024. But remember, growth stocks swing widely, right? So even though they're growing at a fast rate, they usually have pretty big dips and valleys, volatility within that stock. So you do want to be mindful of that. But just understanding that there are growth stocks and you want to have a couple solid ones in your portfolio, they're going to help you grow your account a little bit faster. The next one, dividend stocks. And dividend stocks are stocks that are going to pay you cash for just holding them, right? You have Johnson & Johnson that's paid dividends for over 50 years, increasing them annually. And if you look at the Dow, which is something that we talk about a lot, most of the stocks in the Dow are going to pay dividends. You're also going to look at the S&P. We talked about that earlier. The top 500 companies, a lot of them pay dividends as well. And again, if you hold shares in those companies, they're going to go ahead and pay you additional funds just for holding those shares. Usually they're quarterly, some pay monthly. You just have to be holding the shares on the ex-dividend date, and then they will send you a check, or you can have it right back into your portfolio, whatever you like. But again, as you grow your account, if you grow those dividend stocks within your portfolio, you're going to increase the additional funds that are sent to you by these companies that pay dividends. All right. And the last one is defense stocks. So these are companies that sell essentials, like Procter & Gamble sells Tide, Gillette, Pampers, products that people buy no matter what's going on in the company, right? Or in the economy. So you want to have a few of these defense stocks as well, because there are tons of things that go on, cyclical things that yearly the stock market kind of, has reaction to that, but then also external things, right? We have a lot of things going on with inflation. We've been talking about the Fed chair, Jerome Powell, and the things that he's doing to try to keep interest rates down. We have, Donald Trump is president now, and he tweets and different things that impact the market. You never know, your favorite company might have earnings, might have a bad earnings call. Anything that can impact your portfolio, but you want to have some defense stocks as well, because like I said in the example, they are things that are essential, right? People are going to buy these things no matter what's going on. So we don't have to worry about their top line revenue or things that are going to drive the stock price down. Mainly the only thing that impacts them will be external factors, but they'll be a solid thing to add into your portfolio as well. Now, if you mix these like the pros do, based on your goals and your risk, you don't want to have too much growth. You might panic in a downturn or get too defensive, but if you get too defensive, you might lag in the market. So you want to make sure that you have a good mix, make sure that you have your portfolio kind of set up in a way where you're going to have a little bit of each one, right? A little bit of growth, a little bit of defense stocks, a little bit of dividend stocks, and that's going to keep you in a good place as you're growing your account. All right, so the next thing I want to talk about is the stock price is just the headline, right? So the real story is in the company's numbers, and I talked about this a little bit earlier. You want to make data-driven decisions, so you want to be able to look at the numbers and make sure that you're making solid decisions based on what the company is doing, because again, you are buying pieces of a company, right? So the more you know about that company, how they make money, how well they're doing against their competitors in their vertical, is going to help you with making better decisions on where you want to invest your money. So we take an example of Apple in 2001. Its revenue was about 5.3 billion. And then in 2024, it was over 380 billion. So early investors into Apple saw the iPod, they saw the iPhone, they saw the iPad coming, and they stayed in, right? They've been long-term investors. They held onto those shares through the ups and downs because they understood the story. And before you buy a stock, there's some things that you should look at. So you want to look at revenue growth, right? Are sales increasing year after year? And that's something, again, we talk about that top line revenue. It's something that's really going to drive that stock price. You want to look at profit margins, right? Are they making more money on each sale? So are their products able to generate more profits, or are they starting to fall under based on how those profits are selling or products are selling? You want to make sure we stay in tune with that. You want to look at their debt levels, right? Too much debt can crush them in a downturn. So you want to make sure that they get into too much debt. And lastly, you want to look at industry trends, right? Is the market there growing or shrinking, right? So one of the big markets, one of the things that everyone's talking about now is AI. We've been on a tech run for a long time, but AI is kind of adding more to that. So just some things to kind of look at: what's in favor in the stock market, what are companies doing again on that top line, profit, debt levels, industry trends. And just one thing we talk about a lot. So before investing, you really want to be passionate about what you're investing in, because that's going to make sure you're reading those earnings reports. You're going to be looking at what's going on with the company. You're going to understand how they're making money, what things they're doing to grow. If they're going into, developing new products, or they're going into new verticals and different things, starting some new competition, you're going to be in tune with all of that so you can continue to make good decisions. So everything there, again, you don't want to just look at the stock price. That's just the headline. You really want to understand the numbers and make data-driven decisions. So that's going to wrap it up for today's video. I want to keep reminding you to keep learning, Keep investing, and remember that in the stock market, one of the greatest things you have is time, right? So continue to stay patient. If this video helps you out, go ahead and hit that like button below. Also, if you're interested in getting some personal coaching, you can go ahead and look below, or you can type flex in the comments. We'll go ahead and send you some information on how you can book a call with us so we can go over some of your goals and how we can assist you with that. If you are looking for some cover call information on how you can start generating some cash flow within the market, we have a great course on Udemy. All you have to do is type in income below. And lastly, if you just want a weekly newsletter, you want to stay up on the stock market, everything that's going on, type in free in the comments. We'll send you a link to go ahead and get signed up for our free weekly newsletter. But yeah, that'll go ahead and wrap it up for today. We'll see you on the next one. Have a good one.